Good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for Wednesday. Boy, time is flying. It is the 3rd of January, 2024, 6:05 p.m. Central Time. Now, this is not the same market, is it? Does it feel like it? That you had a week ago, 2 weeks ago. All we did is we saw, if you think back about it, especially in December, the dollar break, the metal markets take off, and the stock market continue on in a 9-week journey just to higher and higher prices. And suddenly, the market has changed on you. The gold market is now having itself fall back into the 2050 area. You're looking at the copper market no longer threatening the $4 mark, pulling back. You're looking at bonds and notes. Well, you know, it's no longer 3.8 on the 10-year. It's closer to 4%. So this is what's going on. It's a correction of sorts. In the energy markets today, there's nothing bullish that came out new except fear. And the fear is that in Iran, there was an attack. 100 mourners were killed, nearly 200 bystanders that were attending Commander, I think it's Soleimani's 4-year remembrance of his death. And now, of course, the world's fearful that Iran will blame Israel and, of course, the United States. And Israel never says yes or no to anything. All they do is stay quiet. But I read forensic reports of how this attack was and how a bomb was placed within a car and another one planted by the burial site. And according to everything that I'm reading, it just doesn't look as though that's the makeup of Mossad or the United States. That doesn't mean it's not true. You know, in the spy game, anything can happen, so you're never quite certain. But it certainly raised attention. You also saw in the energy that President Biden has given the go-ahead for another 3 million barrels to be bought now for the strategic oil reserve. So that combination kicked the market back, but I'm not convinced it's bullish. I think it's supportive. There's a difference between being bullish and supportive. Certainly, if Iran gets really involved in a massive way on the seas with our boys, watch out. And there is frustration growing, and this affects the gold market especially, that the coalition in the Red Sea is not getting the job done. Yeah, they know that when ships get attacked, they can come out and they can protect them, but that isn't what it's about. It's about stopping them from being attacked. Well, I want to attack you with an idea. Remember, we have our New Year sale going right now. It lasts through this Friday, the 5th. A lot of you have taken advantage of it, and I appreciate it, and I think you will during the year. That's my goal, of course. But any new subscription, 40% off. You don't need a discount code. You go in, you buy, it'll show up as you're putting in your credit card and all, and you hit it. Everything will come in. Believe me, we'll make it right. If it isn't, not one of them have gone through wrong that we know of. If you're a current subscriber on a monthly basis and you want to upgrade to a yearly, I'll accept that. But we're not going to allow, if you have a yearly subscription and you want to come out of that for a different one at a 40% discount. You can add another one, but you cannot swap. Got it? That we're not allowing. If you have questions, you can always call us, but go to iraepstein.com under the word research. Move your cursor up here at any time if you're on a PC, and you will see that there's an icon. Give it a click. Just go. It'll take you right into the research area, and away you go. We'll get you onto the system, and from there on, let's hope things go the way I hope they go, all right? So, yeah, it's been a rough 2 days as the new year's begun because you pulled the plug on the stock market. In fact, markets that were all going up came down. Those that were going down are going back up. It's a flip-flop as money gets moved around. Traders are finding reasons to come out. Markets are stepping in and out of trends. When you look at gold on a weekly chart basis, when a market is over the 18-week average of closes, I automatically teach and I tell you the bias of the market is to the upside. You need a number on a chart that tells you bullish or bearish bias. Filters. What is the market doing? If the market pulls back just the way it did here, I would expect it to be support. As it did here when it rallied, I'd expect those zones to be the resistance. And then if it crisscrosses, the game changes on you. When we take a look at the Fed gold, if you take a look from this high to this low, you had a bounce of just about 50% plus, and you've pulled back a little bit. Okay, the short-term trend is what right here? There isn't one. A trend is defined as having higher highs, higher lows for an uptrend, lower highs, lower lows for a downtrend. But when you have a higher high, as you do here than that one, and a lower low than you do with that one, you have nothing. So the market stepped out of its uptrend when this low was taken out, and the market then saw the stop losses as traders ran for the sidelines in the market. Where's the market gone to in fighting a battle? Market after market often, the word is not always, often, will come back and fight at the 18-day average of closes. To me, it's the most important moving average on a chart. Some people use a 20, some a 21. I've tried them all. I used to buy a service, in fact, that optimized them. I didn't find it of any use. And I finally settled in that the 18, after trying, and I'm talking decades of doing this. I'm not talking, I just discovered this. This I've been using this way and researching that specific moving average probably 40 years. So I'm very comfortable that I'm onto something there. And that's where I'm expecting the market to now try to determine what it's going to do next, back into the uptrend or create a downtrend. When we see where the market stopped, you will find out that 95% of the time the market will run up to or down to a Bollinger Band and give you a natural stall. The narrower the bands are, the bigger the eventual move out of them. The wider they are, the more reliability there is that that'll be a resistance or a support number. Momentum goes hand in hand with it. I was reading a report that I wrote about in tonight's full research report. I not only do my morning videos, the best thing you can get is my morning videos with my written commentary. And the reason is I give you everything I've learned in the written commentary. And tonight I'm talking about some traders that were looking at the relative strength, the 14-day relative strength index on the stock indices, and what the market does. And believe it or not, the market gets oversold and they go, you know what it's done 4 times? It's rallied back to the 200-day average. I start laughing because that's fairly archaic compared to what I'm showing you here. But it is important. The slow stochastic, to me, is way better than relative strength. It has personality. It can get overbought, oversold, or it can lock in. You don't lock in, really, with relative strength. It just gets overbought or oversold. And do you add with that or not? Most people are petrified of adding, yet if you embed in the slow stochastic, and I teach that in our courses, you get confidence that until it's over, baby, it ain't over. I'll show you again that, and when we get to the stock indices, how it stayed that way for 8 weeks. And you know you had a powerful rally, and yet you had confidence about the rally. Well, you don't have any confidence right here. You got overbought. You got up to the Bollinger Band. I teach that's where, if one were long, that's where they're taking money off the table. Now, in the gold-silver ratio, as long as you're staying over the 18-day average, it means that gold is stronger than silver. Why? These numbers represent, in a perfect world with no commission, you fill up your cart with your, right now, 88.37 ounces of silver. You go to your friendly man in a mall, wherever they're located, and you're going to give them that cart. Take the cart back, of course, to the probably the grocery store, and he's going to give you 1 ounce of gold. And that's what this number represents. How many ounces of silver it takes to get 1 ounce of gold. The lower it goes, the more bullish the silver is. But when you're over the 18-week average, it shows you how bearish, that's how I look at it, the silver market is. And you can see that right here. Look at how different the charts look. And that's what's going on. But you're already in now oversold territory. So in this zone is where I'm looking for the pros to do some short covering. This is not an add to short area, in my opinion. Not something they'll do. Copper, the little bit you know. What did we talk about yesterday? So I'm on with you yesterday evening, and we're over here. This is Tuesday. I said, okay, we have pulled back to the support. Will the market find it here? There's another layer under here if it drops a little bit to the 200-day average, but you're in that zone of the support. That's what I'm looking for in the market. And then let's come back one more day, go forward. Here we are today, and here you are tonight, okay? That's what you're looking for. Zones, what the market might do. Again, it's a market that got up to the Bollinger Band, never did embed, got overbought. These were the areas for the resistance, not for adding contracts or taking them off, if anything. And in the platinum, I thought platinum would do better. Now, platinum, I have to tell you, I had told clients to buy a small amount, very small, because the seasonal was up. And at the time that I did it, we had the embedded reading. Well, you lost the embedded reading, all right, right here. Where does it go? Right into the support. This is where I'm looking for the support to show. And you'll say, well, why don't you hold on to the bullishness? Well, the trend is up. But you lost that, and I don't know how deep the market might want to go. The reason that I told clients to get in was lost. Is the trend still up? Absolutely. But you'd have to risk a bit further here, and suddenly you're turning what I'll call a reasonable risk into a much bigger risk because the trend is up. Do I think the market's going to hold? I do. But I'm still wrong the trade. And yeah, I don't walk on water. I get wrong. In the dollar index, you know what I'm going to say to you. When you lost the embedded reading, here's the market with the embedded reading. You have to have several days where the market is underneath this. If the market turns, you lose the red line, it gets over. Prices should go to at least the closest main moving average. In this case, it's not the 100, it's not the 200, it's the 18. Tell me it didn't just do that. And now I'm looking for the market to stall out. Now, your slow stochastic numbers will not be the same as mine. If you're a paid subscriber of my research, absolutely, I'll be happy to give you the formula. If you're not, don't bother, I won't give it to you. And we make it available in TradingView as a suite of indicators with outside days highlighted, because outside days are so important in markets. So you put this all together, understand what we've got. We've got the first, believe it or not, the first 48 hours of trading done. And the market is seeing corrections. That doesn't make a year. We are seeing the market adjust to extraneous moves that they had at the end of the year. They're getting back in sync, and they will get in sync. We saw today the first of some jobs reports. We're going to get more of those. We're going to get tomorrow the ADP, the Challenger Gray, and then on Friday, the U.S. jobs. And then after that, we're going to get a lot more. We had the Fed minutes today. Did the Fed help? Well, I'll talk about that when we get into our financial update, which I'll do right after this one. In the meantime, please remember to take advantage of the sale. 40% off the research, iraepstein.com under the word research. You can move your click right through here. When you put in all your information and buy it, you don't need a discount code. The price will automatically drop once you hit purchase, and you will get the discounted price. I'm Ira. Please take advantage of it. You enjoy yourself, and I'll catch up with you all in my next videos.